Hello traders, this is Dan Gibby, Chief Option Strategist at Master Trader, and I'm going to share a trade with you that we're giving the subscribers to our advisory swing and options letter service this weekend. And in the letter, in addition to very detailed market review, sector review, with prepared videos, we give a number of stock and option trades. And in the options section, we both buy options or spreads, or we sell options or spreads. A directional is when we're buying them and we're wanting a big move. When we sell them, we're just expecting a compelling short-term top or bottom, and we're selling options, keeping the premium with the hopes, expectation based on the pattern that we're going to keep the money because the chart's not going to go there in X number of days to expiration. Now this one, XLY, is an ETF. This is what we call a gap and snap reversal from a climactic buy setup. It closed deep into this bar after quickly negating that ugly gap. Then notice higher highs, higher lows. Here's a little continuation pattern where it traded under this prior green bar and then had a bullish gap up with a closing breakout. Now, could this be a directional short-term 1 to 3 swing trade? Sure it could, because you have a price void above. But what I found very interesting on this is the puts. Notice down here, and this is over the weekend, so we're going to have to hope that this bid is still here on Monday morning when the market's open. But you see how they're very illiquid. We never like to trade illiquid stocks unless something like this occurs, where a big bid is jumping out smack at you in the face and it's far out of the money. Apparently somebody has a bid there. They wanted to close that position, so it's probably a good till cancel bid is my guess. So on this, now we go back to the chart. This is the format that we give all of our trades: the date, the symbol, the strategy, the technical setup. So this was a breakout after it's gap and snap, red bar ignored. And we're saying this is so far away, the 159s. 159 from, just rounding up here to 179, is 11.7% away. So if we sell 10 put contracts at $1.10 a share, since one contract represents 100 shares, then that means $1,100 will immediately be deposited into your account. Now, 99% of the time, we use a protective stop, which would be under support if we're selling put spreads. But in this case, we're saying there is no stop. If I'm obligated to buy 1,000 shares of XLY at $159, within 5 days, that's my only risk. This is just for this 5 DTE puts. Then I'm getting this at an 11.7% discount. If you look at the weekly chart, there's massive support over there. But our intent is to keep the $1,100 and not have to deal with it, because it's just the odds of this pattern holding this last week's low for 5 days is staggeringly high. And so that's the rationale for that. Here, I'll just quickly show you a couple others here. There's so many bearish patterns out there that we're going to have an overload. This is what we call a bear put debit spread. It's a directional trade. AFRM, closing breakdown, we're giving that as a directional option. Short, SPCE, same. Roku, same. Beyond Meat, we're just going to buy $43 in the money puts. RBLX, beautiful breakdown, descending triangle. This thing just looks absolutely horrible. AMC, horrible. Massive trading range in a downtrend, can't bounce. And so those were the option trades. And this is the format of our Master Trader plan for the week. We have detailed written commentary. My partner Greg does a great analysis of the broader markets, of the sectors, and he does what's our bias for the week. Always take a look for a technical review of the Dow Industrials. There's daily, weekly chart. These are our targets here on the downside. And Greg does a detailed video, and now here's stock ideas. And you're going to see there's just so many in here. CMCSA, Fitch, NVTA, PACB. Look at that. That's another trading range in a downtrend. Can't bounce. Twilio, Western Digital, TSP. Looks like it might go to 0. That's a death trend. RMD, breakdown. Green bars ignored. You learn all these in our Greg's swing trading course. Obviously covers the technicals, and I have option seminars that teach both buying options and selling options around the charts. This is actually a long. This is what we call a bullish 1, 2, 3, 4 continuation, but it has to trade over the highs. Argo would also be a breakout, red bar ignored, but the entry is last week's high, and then you have a price for it. We actually had a beautiful trade on this gap reversal at the low. So that's it. Hope you enjoyed that. Come visit us, take a trial, mastertrader.com. See you in the next video. Good trading.